Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Auction Finance Guide: Essential Tips for Successful Bidding. Auction finance can be a valuable tool for investors looking to expand their portfolio through property auctions. This form of financing allows bidders to quickly secure funds, ensuring they can complete a transaction within the typical 28-day deadline set by auction houses. By understanding the basics of auction finance and the various options available, you can make informed decisions and navigate the auction process with confidence. Understanding auction finance. Auction finance is a type of short-term funding specifically designed for purchasing properties at auctions. It provides buyers like you with a quicker alternative to traditional financing methods, helping secure the desired property without any delays. In auctions, obtaining finance can be challenging as conventional mortgages may not be readily available within the limited time frame. This is where auction finance steps in, giving you the option to use bridging loans, commercial loans, or buy-to-let mortgages to support your purchase. Bridging loans are a popular choice as they enable you to complete the property purchase swiftly, usually within 28 days of the auction. They act as a bridge until long-term funding, such as a mortgage, can be arranged. This type of finance is ideal for those looking to refurbish or renovate a property before refinancing or selling it. When opting for auction financing, it's essential for you to research and understand the terms and conditions of the loans. Ensure that you obtain a clear estimate of the interest rates, fees, and loan durations to make an informed decision. Keep in mind that, despite the benefits of auction finance, securing a loan with specialist lenders is often subject to your creditworthiness, assets, and experience in property development. Thus, it is crucial to assess your financial situation and consult an expert if necessary. To summarize, auction finance provides a flexible and efficient way to purchase properties under the auction hammer. By understanding the various loan options available and evaluating your finances, you can use auction finance to your advantage and help make your property investment dreams a reality. The auction process. When you participate in an auction, you are entering a competitive bidding process to buy goods, such as a property, from an auction house. To begin with, familiarize yourself with the auction catalog and choose the items or properties you are interested in bidding for. In most cases, you will need to provide a 10% non-refundable deposit on the day of the auction if you are the winning bidder. Ensure you have the funds readily available, as you will be required to complete the purchase within 28 days. Due to the tight deadline, it is essential to have your finances in order prior to entering the auction process. One financing option to consider is auction finance, which is a form of bridging loan used to buy a property at auction and complete the purchase quickly. This financial option is designed for auction timescales, ensuring a successful property transaction. During the auction, you will be competing against other bidders in real time, so it is crucial to remain focused and have a clear bidding strategy in place. If you are attending the auction in person, make sure to arrive early, register with the auction house, and choose a suitable spot that allows you to be visible to the auctioneer. Property auctions can be conducted in two ways: the traditional method, where the bidding process is faster, and the modern method, which offers more flexibility. Familiarize yourself with both approaches to find out which one suits your purchasing style and goals. In summary, taking part in an auction requires careful planning and a good understanding of the bidding process. Prepare yourself financially by arranging your deposit and considering various financing options, and focus on maintaining a clear strategy during the auction itself to increase your chances of success. Types of properties at auction. When attending property auctions, you will come across various types of properties to build your portfolio. Here, we will discuss some of the common property types found at auctions, including land, residential properties, commercial properties, and semi-commercial property. Land. Buying land at auction can be an excellent opportunity for you if you are looking to develop property from the ground up. It might include plots for residential or commercial development, agricultural fields, or sites with planning permission. Ensure you thoroughly research the land, its restrictions, and the potential for development before bidding. Residential properties. Residential properties are common at auctions. They attract a wide range of buyers, from first-time homeowners to experienced investors. These properties can include houses, flats, apartments, and bungalows with various conditions and locations. Research the local property market, potential rental yields, and renovation costs to make informed decisions. Commercial properties. Buying commercial properties at auction can bring significant returns if done correctly. These properties could be office spaces, retail units, warehouses, or factories. Assess the demand for commercial space in the area and any potential for conversion to other uses before bidding. Semi-commercial property. This type of property combines both residential and commercial elements, such as ground floor retail space with living accommodation above. These properties can offer attractive income streams due to the dual nature of the investment. Keep in mind the potential challenges of managing both residential and commercial tenants. Choosing the right type of property for your portfolio ultimately depends on your goals and expertise. Understanding these categories and conducting thorough research plays an essential role in your success at property auctions. Remember, when bidding at auctions, make sure you have the necessary finances in place, such as auction finance, to complete your purchase quickly. Choosing the right auction finance. As an investor, you want to make sure you choose the right auction finance to suit your needs. Auction finance, also known as a bridging loan, is a short-term lending option specifically designed to help you secure a property at auction and complete the purchase quickly, typically within 28 days. Identify your goals. Before selecting auction finance, consider your investment objectives. Are you looking to renovate the property and sell it for a profit, or do you plan to rent it out as part of a long-term investment strategy? Your plans will affect the type of long-term finance you may need, such as a mortgage for buy-to-let properties or a traditional mortgage for resale. Choose a flexible lender. Lenders that specialize in auction finance can usually provide more flexible terms compared to traditional mortgage providers. This flexibility can be crucial when it comes to meeting the strict deadlines associated with auction properties. Look for lenders who offer tailored solutions, speedy decision-making, and clear communications. Consider your exit strategy. One of the key factors when selecting auction finance is your intended exit strategy, as this can determine the most suitable type of long-term finance. Common exit strategies include refinancing to a mortgage, selling the property, or using funds from the sale of another property. Ensure you have a clear understanding of your exit strategy and discuss it with your selected lender. Compare interest rates and fees. With auction finance, interest rates can vary between lenders, as can application fees, valuation fees, and other charges. When choosing a lender, make sure you thoroughly compare interest rates and fees to avoid any unexpected costs. Seek expert advice. To find the most suitable auction finance solution for your specific needs, consider consulting with a specialist financial advisor or broker. They can help guide you through the process, offering valuable advice and support. By taking the time to thoroughly consider your options and seeking the best possible advice, you can make an informed choice when selecting the right auction finance to meet your investment goals and complete your purchase within the required timescale. Legal aspects of auction finance. When entering the auction finance process, it's vital that you understand the legal aspects involved to ensure a smooth transaction. This includes being aware of the legal pack, the role of a solicitor, and any special conditions that may apply. A critical part of purchasing a property at auction is the legal pack. This documentation includes essential information about the property, such as the title deeds, local authority searches, and any relevant planning permissions. Before bidding on a property, it is your responsibility to review the legal pack thoroughly, as it forms the basis of your contract with the seller. If there are any issues or ambiguities within the legal pack, it's essential to address them with your solicitor before the auction. Solicitors play a pivotal role in the auction finance process. It's crucial that you engage a solicitor who's experienced in auction property transactions to guide you through the legalities. Your solicitor will not only help you review the legal pack, but they'll also advise you on any potential risks or liabilities that may arise during the purchase. Additionally, they'll ensure a seamless transition of the property title from the seller to you once you've secured the auction finance. Sometimes, special conditions might be attached to the property you're interested in purchasing. These conditions, which are included in the legal pack, could impact your auction finance arrangements. For instance, There may be an outstanding planning permission or restrictive covenant that could affect your ability to secure the necessary funds. It's crucial that you're aware of these conditions and discuss them with your solicitor, as they could have a bearing on your auction finance application. By taking the necessary steps to familiarize yourself with the legal aspects of auction finance, you'll be better prepared to navigate the complexities of the process. Remember to review the legal pack diligently, consult an experienced solicitor, and assess any special conditions that may apply to the property you're interested in purchasing. This approach will help you make informed decisions throughout your auction journey. Preparation before auction. Before participating in a property auction, it's essential to make sure you are well prepared. This will help ensure a smooth bidding process and increase your chances of securing the property. Firstly, ensure you have the necessary funds in place. This means having your deposit ready, as well as being prepared for any additional fees auction houses may charge. You should also consider obtaining a decision in principle from a mortgage lender, which will give you an indication of how much money you can borrow, helping you to establish your budget. To obtain a decision in principle, you'll need to provide the lender with proof of your deposit. This can be in the form of bank statements or a savings account statement. Keep these documents handy, as you may need to present them to the auction house on the day of the auction. Another crucial aspect of preparing for an auction is to view the property you're interested in. During a viewing, observe the condition of the building and identify any potential issues that could affect your decision to purchase. You may also wish to consult with a surveyor to fully understand the property's condition and to estimate any potential renovation costs. When you're confident in your financial position and have viewed the property, make sure you're registered with the auction house and have completed any required identity and anti-money laundering checks. This step is crucial, as it ensures you are eligible to bid on the day of the auction. By taking these steps, you can ensure you are well prepared to confidently participate in the auction process, and make informed decisions about the property you intend to bid on. Risks and challenges. As you venture into the world of auction finance, it is crucial to be aware of the risks and challenges associated with this approach. Understanding these potential pitfalls can help you make informed decisions and protect your financial interests. One inherent risk in auction finance is the possibility of default. Unlike traditional financing, where funds are released after a due diligence process, auction finance typically relies on the winning bidder providing payment within a short time frame. This can lead to difficulties if you are unable to secure financing in time or if your financial circumstances change unexpectedly. Be prepared by having your financing in place before participating in an auction, and ensuring you have sufficient contingency funds to cover any unforeseen issues. Another challenge you may face is the presence of adverse credit history. If you have previous defaults, missed payments, or other financial blemishes on your record, obtaining auction finance can be more difficult. Lenders may view you as a higher risk and may be hesitant to provide funds, resulting in stricter lending criteria and higher interest rates. It's essential to be transparent about your credit history and work towards improving it if necessary, to increase your chances of securing auction finance at competitive rates. When participating in auctions, it's crucial to consider the risks associated with the properties you are bidding on. Auction properties may have hidden issues, such as structural problems, legal complications, or outstanding debts. To mitigate these risks, conduct thorough research on each property before bidding, including obtaining property surveys and legal packs, and consulting with professionals such as solicitors and surveyors. Finally, the process of exchanging contracts can also bring challenges. In an auction, the exchange of contracts typically happens as soon as the hammer falls, which means you are committed to the purchase without the usual conditional periods. This can lead to complications if, for example, your financing falls through or issues with the property arise post-auction. To avoid this, it's vital to be well prepared and have a clear understanding of the auction process before entering the bidding room. By being aware of these risks and challenges and addressing them proactively, you increase your chances of successfully navigating the auction finance landscape. Armed with knowledge and a proactive approach, you'll be better equipped to make the most of the opportunities available to you. Repayment and exit strategy. When dealing with auction finance, it is essential to have a well-planned exit strategy in place. An exit strategy is your plan for repaying the bridging loan at the end of its term. In most cases, The primary exit strategies for auction finance are either selling the property or refinancing it to another type of mortgage. To make your exit strategy successful, consider the time frames and potential challenges you may face. Typically, a bridging loan term can range from a few months to a couple of years. However, the deadlines for auction transactions can be tight, sometimes as short as 28 days. Make sure you account for these specifics in your plan. You should also pay special attention to your property's characteristics, such as its location, type, and condition. These factors can influence the property's demand on the market and impact your ability to sell it quickly. Additionally, be prepared to factor in any necessary repairs or renovation costs that could delay your exit strategy. Refinancing is another popular exit strategy for auction finance. It involves obtaining a mortgage to repay the bridging loan. Keep in mind that refinancing may take time, and you'll need to secure a suitable mortgage offer. To achieve this, maintain a good credit score and provide proof of your income and affordability. In summary, having a clear and realistic exit strategy is crucial for managing auction finance repayments successfully. Carefully consider your options, plan ahead, and remain aware of the bridging loan terms, property characteristics, and market conditions. By doing so, you can confidently navigate your property auction investment journey. Post-auction process. After winning a property auction, it's crucial to understand the steps involved in the post-auction process. Following the correct procedures will help you complete the transaction smoothly and avoid potential penalties. Firstly, you need to be aware of the completion deadlines. Typically, you must provide a 10% non-refundable deposit on the day of the auction and complete the transaction within 28 days. It's essential to keep these deadlines in mind, as any delays could result in losing your deposit or facing additional fees. Make sure to arrange your auction finance promptly. If you're using bridging loans or other short-term finance solutions, work closely with your lender to ensure funds are deployed within the required timescale too. This includes providing all necessary documentation, such as proof of identity, property details, and survey reports, in a timely manner. As you progress with the property purchase, paying close attention to any early repayment charges associated with your auction finance is also important. Lenders often include these charges to recoup their costs if you repay the loan before the agreed term ends. Understanding these fees and factoring them into your financial planning will help you make informed decisions when managing your investment. To sum up, being well prepared and diligent in the post-auction process is crucial for completion and effectively managing your financial commitments. By adhering to completion deadlines, ensuring your auction finance is arranged swiftly, and being aware of early repayment charges, you can successfully navigate this process and enjoy the benefits of your property investment. Understanding loan-to-value, LTV. When you're considering auction finance, it's essential to understand the importance of the loan-to-value, LTV, ratio. The LTV ratio is a critical factor used by lenders to assess the risk associated with a loan. In simple terms, LTV represents the proportion of an asset, such as a property, that is being financed through a loan. To calculate your LTV ratio, you'll need to follow these steps. Find out the loan amount you require for the property. Determine the current market value of the property. Divide the loan amount by the property value. Multiply that number by 100 to get the LTV percentage. For example, if you need a £150,000 loan to purchase a property valued at £200,000, your LTV ratio would be 150,000 to 200,000, * 100 equals 75%. Lenders typically use the LTV ratio to gauge the level of risk involved in providing a loan. A higher LTV ratio indicates a higher level of risk for the lender. If the LTV ratio is too high, they might charge a higher interest rate or even decline the loan application. On the other hand, a lower LTV ratio implies that the borrower has a significant stake in the property, thereby reducing the lender's risk. It's essential for you, as a prospective borrower, to be aware of your LTV ratio when applying for auction finance. Aim for a lower LTV ratio to improve your chances of approval and access to competitive interest rates. Keep in mind that competitive forces in the market can often influence LTV ratios, so it's crucial to research and understand how it may affect your specific situation. Ultimately, knowing the ins and outs of the loan-to-value ratio can help you make informed decisions when seeking auction finance. By understanding and managing your LTV ratio, you can navigate the auction finance landscape with confidence, making the process smoother and more successful. What are the common types of financing for auction properties? When it comes to purchasing auction properties, there are a few common financing options available. The main types include auction finance, also known as bridging finance, short-term loans, buy-to-let mortgages, and commercial finance. Each option has its own benefits and is suitable for different purchasing scenarios. How do I qualify for auction finance? To qualify for auction finance, you typically need to meet certain criteria set by the lender. These may include having a good credit score, being able to demonstrate a clear exit strategy, and having a property valuation conducted. Each lender has their own specific requirements, so it's important to research and compare potential lenders to find the best fit for your situation. What are the main differences between auction finance and a traditional mortgage? One of the main differences between auction finance and a traditional mortgage is the time frame in which funds are made available. Auction finance is designed to provide funds quickly to cover the remaining balance, allowing you to complete the auction purchase within the required time frame. In contrast, traditional mortgages can take several weeks or months to be approved and funds released. Additionally, auction finance tends to be a short-term solution, whereas mortgages are usually long-term commitments. Auction finance is also typically more flexible when it comes to property types, while some mortgage lenders may have stricter criteria for eligible properties. What is the usual repayment period for auction finance loans? Auction finance loans are typically short-term, with repayment periods ranging from a few months to a couple of years. This allows you to access the funds needed to complete your auction purchase, with the intention of repaying the loan once longer-term financing is obtained or the property is sold. It's important to have a clear exit strategy in place, as failure to repay the loan within the agreed timeframe can result in additional fees or penalties. How do I find suitable auction finance lenders? Finding suitable auction finance lenders involves researching and comparing various lenders who specialize in providing finance for auction property purchases. Factors to consider include the lender's reputation, their track record in auction finance, and the speed at which they can release funds. Our auction brokers can help you find specialist finance providers to assist with your auction property purchase. What is the process for arranging auction finance? The process for arranging auction finance typically begins with researching potential lenders and requesting quotes. Once you've selected a lender, you'll need to provide information about the property, your financial situation, and your exit strategy. The lender will then review your application and, if approved, release the funds you need to complete your purchase. Make sure to familiarize yourself with the terms and conditions of your chosen auction finance lender, as this will help you better understand your obligations and avoid potential pitfalls. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.